So today we've brought Danielle DeMarco in. She is our preferred mortgage specialist because we've got lots of people talking to us about the GST rebate and how to make that work. We've run into some tricky situations where we've got people that are needing parents to co-sign or become guarantors. We're going to talk about that, the difference between the two today. And Danielle's going to give us her expertise on the entire GST rebate program. So Danielle, thanks so much for coming on this morning.
Yeah, you're welcome. Thanks for inviting me.
All right. Do you know everybody on the call?
Yes, because I was on the call before, and so I met Kelly before.
Okay, great.
Yeah.
Perfect.
I do.
Awesome. So, talk to us about this whole GST thing because, I'll be flat out. I don't know all the ins and outs of it. I just know the overview of it. So why don't we start right there? Can you just explain to us what the whole GST rebate program is all about for buyers now?
Yeah, for sure. So, I'm sure most of you have kind of heard the general gist of it. So it is obviously self-explanatory. It's a first-time home buyer GST rebate. It only applies to new homes where GST is applicable, not resale homes. So buying direct from the builder. You have to be a first-time home buyer, which I will get into that explanation. It's a fun, long explanation. But depending on the value of the home, you can recover up to 100% of the GST back. So if you are at or below $1 million in price, you can get up to 100% back. So that's typically where we're going to fall because there's not a lot of first-time home buyers that are going to buy at over $1 million and up to 1.5 million. So really, you're going to see your home buyers get the full rebate back. When it first came out, there was a lot of talk about who's going to apply the GST rebate and how is this going to work. The builders have sorted through it for the most part, and they're all typically just having their clients sign a form that shows that they've acknowledged that they are a first-time home buyer. And so by signing that form, the liability is put on the home buyer. If they lie and say they're not a first-time home buyer, then CRA should come back to them, the home buyer, and the builder would be off the hook. So they're going to be applying these rebates. They're going to be applied back until May of last year. So as long as you bought between May of last year and now, you'll get you're a first-time home buyer, the builder will go back and on your closing statement, we'll take that GST off once you sign that form.
And if you already took possession, you would just do it on your taxes?
Exactly. So if you already took possession, you do have to apply to CRA directly, fill out all the required forms, and submit it to CRA, and then you'll get your rebate back. So the biggest difference in that case really is the mortgage amount, because people who got the GST rebate applied to the price are going to have a lower mortgage amount and lower payment, whereas the people who didn't are going to get it back after the fact. So they could use it as a prepayment on their mortgage and use their prepayment privileges, but their payment won't adjust down. It just goes directly toward principal, so it lowers their balance, shortens their amortization. So at the end of the day, when they come up for renewal, they're going to owe less on their mortgage. I don't actually 100% know. I'm assuming you can just keep it. I'm assuming it does not have to apply to your mortgage, which is kind of interesting. So people that did pay the rebate, if they're getting $50,000 back, right? Yeah. So I don't know how many people would actually use it as a prepayment versus how many people would furnish their entire house. So I'm not 100% sure on that. I don't know if anybody's really, we're just going to start seeing filings come through now, right? Because taxes only due. So
Danielle, is there any chance that the CRA would just apply it as a tax credit? Do you think?
It's possible. It when you actually look up the program, it doesn't actually say.
Okay.
So yeah, it just tells you who can apply. So a first-time home buyer. They're very specific on the home that you can buy, but again, most of them are just going to be the builder. But yeah, how to apply is really through the builder or to CRA. But I do not know. I can't answer the question on how CRA is going to rebate that back to you. I don't know the answer to that. So
Be challenging to do it as a tax credit, depending on how much people owe outside of what, because most people are salaried, they're not paying their own taxes. So it would be challenging to do it that way. It would be the smartest way to do it because then the government isn't actually paying money. They're just not taking money in. But I think it would be challenging to do that because of how people get paid.
Yeah, and I think too, it'd be really tough for somebody who was able to apply it to their mortgage and have a lower balance, but that somebody else can't take that and apply it as a payment to their mortgage and have a lower balance. So I think, I agree. I think it's going to have to come back as a rebate, but what that looks like, how long it takes to process. I mean, the amount of money and time and energy that the government's going to have to put into auditing and reviewing all of these applications. Who knows how long it will take for someone to get their rebate back. But
yeah, there's going to be like with any new program, I can just see the amount of fraud that's going to be happening here that they just miss too.
And I mean,
it's going to be such a heavy lift.
COVID, when they had those CERB and CEBA payments and everybody was filing and applying, and it's like people were approved, but then it got clawed back. And so really, I don't know how CRA is going to take that portion on, but as long as you are a first-time home buyer and you purchased from a builder, then you would be eligible for that rebate. And right now, going forward, builders are taking it off. The purchase, or most of them, like the spec builders, are for sure taking it off.
Cool. So just a few things we should do some research on. Just how is that rebate coming back? What's the fine print on that? And then we've run into some situations here where people can't qualify for mortgages on their own, so they're adding parents to purchase contracts, and that's a little fly in the ointment here. So Brandy, do you want to explain your situation, because you're the one that was right in the middle of this? Do you want to explain it? And then Danielle, do you want to talk the difference between a guarantor and a co-signer, and which is, what's the benefit of each? Do you want to do that?
Yep.
Hey, Brandy, give her.
Okay, so I've done 2 first-time home buyers this month. So one was super easy, Excel. It is a build. They just took it off, no problem. She signed a disclosure. This one is a spec home, and he has to have his parents as co-signers. So originally the builder came to us, today's Wednesday. I think Monday the builder came to us and was like, oh, the problem is we sent the disclosure for them to sign, and it asks you, have you owned a home, etc., whatever. And obviously the buyer said no to everything. So that's fine. But the dad, who's the co-signer, obviously said yes. So when the dad said yes, then it triggered the builder to freak out. And the builder was like, wait, no, we're not taking the GST off. And so that's when we kind of got back involved, Danielle and I. So the sales agent and I talked, and then I called Danielle. That's when Danielle decided to try to get a guarantor instead of a co-signer. But since then, last night, the builder texted me again, messaged regarding hearing back from his lawyer. So originally they said, if you're on title, you cannot qualify for the GST rebate. And now the builder's lawyer has changed that, it sounds like. So now we could have so it's still, here's the problem is Danielle and I were talking about it last night, and we're like, here's where it's kind of getting muddy, because now this lawyer for Douglas Homes is saying this, but we actually don't know what the next builder's lawyer might say with a co-signer. So I think this is going to be kind of builder by builder dependent for the first bit until everybody is across the board.
Okay.
Do you know what I mean? Right,
Yeah.
Danielle? Danielle's kind of more versed in this than me, but I don't know what every other lawyer is going to say.
I think what the lawyer had come back and said was that portion didn't actually make it into the final cut of the, what do you call, not law, but quote unquote act, right? Where it's when they came out with the final rules and outlines of the GST rebate, if you Google it, funny enough, it says if a parent is on title, then you're not going to get the rebate. But the Douglas Homes lawyer confirmed that that portion did not actually get finalized in the final release. So it's something that I think was on the table and then was removed off the table. So the confusion yesterday was even the lender, like I called a couple lenders and they had never heard of it. And they were just as surprised as I was. So my instinct is saying it shouldn't be an issue going forward. It was more so, again, like Brandy said, I think every builder is going to kind of have to ask their own lawyer. Ultimately, the end result, I'm sure all the lawyers are going to come back and say, no, it didn't make it into the final act, so you're fine. But we might have to run into, a couple extra days delay while they're figuring it out with their lawyers, the same way Douglas Home had to take a couple extra days and actually just do some due diligence.
Cool.
Mhm.
Okay.
Yeah.
Go ahead.
Oh, no, I was just going to say, as far as the options go, like guarantor and cosigner is kind of funny. We field the question a lot when clients are like, oh, well, I want my parents to come on the mortgage. And then when they talk to the parents, they're like, well, no, we don't want to be on title. And it's like, well, no, that's what a cosigner is. And I think a lot of younger generation don't know what a guarantor is, whereas older generation knows what a guarantor is. And older generation, when I talk to parents, they want to be a guarantor, whereas younger generation just thinks I just need a cosigner, because that's kind of the word that floats around most. Sorry. The biggest difference between the two is title ownership. So when you're a cosigner, we need to use your income, your credit. Our debt ratios aren't in line. So maybe a home buyer can only spend $400,000, but adding on parents, they can spend $600,000. So we need those people to be a cosigner. With a cosigner, you are on the mortgage and you are also on the title. So there's ownership of the actual property, not just the liability of the mortgage when you're a cosigner. And that is what 99% of lenders want 99% of the time, is a cosigner. Where a guarantor comes into play is if the applicant is close. So in Brandy's case, and we are still waiting to hear back, we kind of said we're still going to go with the guarantor because we both want to see if we can get it approved that way. If not, we'll switch it to a cosigner, because it's just interesting to see. There is no hard and steadfast rule about when somebody can be a guarantor. It's really subjective, because it's up to the lender and the insurer to okay the parent or cosigner being a guarantor, not a cosigner, because it depends on their debt ratios. So normal debt ratios, and I'm talking like this because I know you guys all know this stuff, but normal debt ratios when you're qualifying for a mortgage, your GDS has to be 39% or less, and your TDS has to be 44 or less. So that's house debt, everything has to be below 44. Brandy's client, for example, is at 49.5. So we're close-ish. So the lender had said, hey, send it in. We'll try for being a guarantor, because it's not like our debt ratio is 60% and we're way out to lunch. We're close to the maximum ratio. So they will consider a guarantor instead of a cosigner. So it's very subjective. If anybody says, I want to be a guarantor, it would be like, well, we're going to have to see. We're going to have to send it in and see what the lender says, see what the insurer says, and what they come back with. There's no guarantee.
With a guarantor, do you use their income to bump up the purchase price still, or it's just to get their debt ratios under?
Well, same difference, right?
Okay.
So like in your client's case, he wanted to spend, let's just call it 600,000, but he could only qualify for 450 or 500. Let's make it closer, because the debt ratios have to be pretty close, right? So 50, 75,000 more they want to spend. A guarantor might work because the debt ratios aren't that far off. If somebody wanted to spend like 150, 200,000 more and needs a cosigner, and to be honest with you, most lenders don't allow a guarantor. So there's only a few lenders that will allow a guarantor as well. So it does restrict the lenders you can apply to. So
and if you do use a guarantor or a versus a cosigner, are the banks penalizing you with a different rate as well?
No, and funny enough, no, not at all. It's the kind of the same thing to the bank. Like they don't necessarily mind having a guarantor. It's actually sometimes better for parents, potentially for tax purposes and CRA, to not be on the title of their child's home as well. So there's different reasons people want to be a guarantor, but we talked about property and title ownership. So co-signers on the title and owns part of the home, whereas a guarantor is not. They're not on the title and they have no ownership rights.
Right.
For a lot, like liability wise, a co-signer is 100% liable from day one. So if I co-sign for my daughter and my daughter misses a payment, that lender can come after me right away for that payment. It's my responsibility as a co-signer to make that payment. With a guarantor, technically you're only liable once they've exhausted all the options in trying to get the money from the applicant. So you're a little bit more protected if an applicant falls behind 3, 4, 5 months and goes into foreclosure, but the lender can recoup all of the losses, then a guarantor isn't really affected. Whereas a co-signer, that would affect you. Right? So guarantor, depending on the lender, also may or may not show up on your credit report. So
Right.
So co-signer is like immediate credit effect, and the guarantor tends to be delayed credit effect. So
Got it.
yeah, but we typically don't see guarantors. I'll let you guys, well, Brandy will let you know how it goes. Like we're gonna try with this lender and see if we can get it done as a guarantor. And if we can, that's great. I can honestly say in 20 years of doing mortgages, this will be the first guarantor I've actually ever done. We've always just had co-signers because, again, there is only a couple lenders that will allow a guarantor. So
yeah, from a parent perspective, I could see being a guarantor as just being the way to do it. Like you'd go, oh yeah, why wouldn't I do it that way? I'm not exposed really. I'm fairly protected. On the flip side though, if you are the co-signer and you are on title and things start to go south, you have ownership in the property. And so now you have ownership rights and you can actually take action and do some things and maybe take part of that property back, or take, depending on how you're registered on title, you can work with the property because you own part of it. I could see that being an advantage to some people, but if you're just helping your kids just qualify and it's just signing a piece of paper, man, why wouldn't you try to be a guarantor?
yeah, and I mean, some parents gift funds and qualify, right? So in that case, title ownership might be important to them because
For sure.
if something happens, and I mean, we see it all the time where we see co-signers with even like first-time homebuyers that are married couples. Well, if something was to ever happen to that married couple and the parents are on title, there's some ownership there with the parents. So like if they give a gift, for example, and their wife's parents, at the end of the day, they're probably going to get a little bit more equity out of that property and get their gift back, versus if they're not on title and there's like a matrimonial split or something like that, it's 50-50 between the married couple that bought the home.
Right.
So yeah, there's benefits and drawbacks every way you look at it. But yeah, we're going to give it a go. We're going to see if we can get it done as a co-signer. So
If you're a guarantor, like say you're a guarantor, does that go against your credit? Like if I co-sign, then that house is on my credit too, right? But if I'm a guarantor, is it on my credit?
it depends on the lender.
Okay.
Depends on if they report in. As far as liability goes, they're supposed to try and get everything they can from the applicants first. And then if they can't get anything from the applicant, then they would go to the guarantor after that.
And so do you know what that process looks like what those steps are?
It would be like standard foreclosure steps where it starts to go in, okay, you're 1 month late, you're 2 months late, you're 3 months late. Let's work out a payment plan. And then if it got it too far into arrears, then that's where they would turn to that guarantor and say, okay, now, we're too far behind. So now we're going to come after you.
Right. And do the guarantors get notified when the payments are late, like the first payment is late, or is it up to the applicant to notify the guarantor? Because I could see that becoming an issue.
Yeah, that's also going to be lender dependent. So what I always tell everybody, like oftentimes on a commitment, when there's multiple borrowers, there's a spot where you can receive separate
Mhm.
correspondence.
Mm.
And so I always say, if you're a co-signer, you should be checking that off so that you're getting your own correspondence and not relying on someone else to fill you in on what's going on.
Right.
Mhm.
Yeah.
Cool.
Yeah.
Interesting stuff. I love it because, that's the thing about this business is that there's always something new. There's always something different, right? And even though this stuff has been used all the time, you just don't use it every day. So
Mhm.
it just adds another little curveball that we get to try to hit.
Yeah, it's interesting. Whenever anything new is rolled out, there's always going to be the, hiccups in figuring it out. But I did actually, Kelly, in response to your question while I was on here, I'm like, I'm going to look this up and see if there's more information on it. So it does say, and again, this is, take it for what it's worth. It is off of the internet, but it is saying followed by a check or a direct deposit from CRA. So
Ah,
I'm
interesting.
assuming that's, again, like Ken and I talked about, that's probably going to be the way. And
Yeah.
yeah,
Man, is that ever an advantage if you are applying after the fact? So that, you've already, you can afford the payments, obviously. And now if you're
Mhm.
smart and you just take the money and knock it right against your mortgage, that's a huge advantage to those people. That's only going to be short-lived though, right? Because this won't be happening rolling forward. It's just the
Mhm.
ones that apply in arrears that are going to get that big chunk, right?
exactly.
Yeah.
Yeah. So everybody that is coming up for possession is likely the builder's just going to revise the closing
Right.
statements
Right.
to take the rebate off and have you sign the form. But funny enough, something that we're talking about a lot right now, when you're talking about taking that money and making the prepayment. So take, for example, people who bought 5 years ago and had COVID rates of like 2%. So their mortgage, when you look at payments, yes, you may have paid your mortgage balance down for 5 years, but your amortization has dropped by 5 years by the end of that. So rates went up over
Mhm.
2.5%. Amortizations went down by 5 years, and your principal balance went down by this much. So you didn't pay off enough to offset the lower amortization and the higher rate, which is why people's payments are skyrocketing.
Yeah.
So if you were to make a $50,000 prepayment on your mortgage,
Oh
your
my God.
amortization after, let's say you start on 30 years, at the end of 5 years, you should have 25 years left. But if you make a $50,000 lump sum, you're probably going to be closer to like 15, 14 years. So
Mhm.
when you come up for renewal, your payment is going to jump like crazy because nobody thinks about the renewal and what happens at the end of your term.
Mhm.
So some people might make that prepayment, but then at the end of the day, when they go to renew, they can't afford the new mortgage payments because the payments are going to go up so high because the amortization has come down so low. And if they can't qualify to switch lenders and extend the amortization back out, they're stuck with that higher payment. So funny enough, it's not something that we had a ton of conversations about with clients until the last like year and a half, where we're seeing these renewals come up, and it's kind of like, oh my gosh,
Mhm. Mhm.
if you don't qualify, you're not working, you had an injury, you're on a mat leave and you're not going back, like whatever it may be, if you can't re-qualify to extend your amortization back out, you're being forced to sign on the dotted line at renewal. And if you've made those prepayments, your payments are going to go up because your amortization is going to be so short.
Wow.
Interesting.
Crazy.
Trickle
It is
down.
very interesting. It's a really curious time. Like it's just there's so many moving parts in our industry right now that it's just not what we're typically used to. There's just been so many things that like when you look in the rearview mirror, it was actually 6 years ago that's affecting today.
Yeah. Yeah, for sure. And we're like, I can say without a doubt, like last year and this year so far are the most refinances I've probably done in a year, like in my career. Like I said, with rates doubling or almost doubling, people are needing to extend their amortizations back out, and to extend your amortization back out far enough, it's a refinance. And so you're requalifying, you're redoing mortgages, extending amortizations out. So I think too, you're having to ask the question, what's your immediate concern? Is it payment relief? Is it having the lowest rate possible? Or is it paying down your mortgage as fast as possible? So it's very different conversations, and a lot more conversations, whereas most people before would have just signed on the dotted line. Now people are looking for solutions. And some of that might even be, hey, I need to list my house and sell, because if I sell and I take the equity, I could buy something else and put it over 30 years, and buy a brand new home. Right. So, I mean, there's going to be some interesting conversations, I think, even over the next year or two as more and more renewals come up. So
It'll be fascinating to see how this all ties together. So renewals, number one, higher rates, and then a GST rebate being very attractive to a new home for a first-time home buyer. It's going to see how it's going to be interesting to see how much more this affects the bottom end of the resale market. You know, that's going to be interesting. Can I talk to you a little bit about wealth transfer too? Because we're talking about parents that are putting, gifting money to kids right now. And we're in a market where we've seen, number one, we agree with you. We've seen piles of people this year inquiring because they have to sell their house because they don't want their payments to go up and they can't afford their payments. It's too uncomfortable for them. So a lot of listings that we've had or had inquiries on are in that scenario. So I see that really affecting the market this year. But then we're also in a market of downsizing, and we're in a market of family homes, a lot of family homes being sold, and then a lot of wealth transfer happening to kids. Are you experiencing a lot more parent gifts than you've ever done before in the past year or so, or is it still the same?
There is so much gift. When you see so much of it, you're like, oh my gosh, am I going to have to like save up this much money for my kids? Like, is this the thing to do now? Like, I can't actually, like the amount of gift. Like, I'm talking $200, $300, $4,000 is being gifted to kids. Again, I would love, it'd be so nice if everybody could do that, but
Sure.
It is interesting to see for sure. And a lot more co-signers, which we expected, because with rates the way they are and qualifying and the way house prices have gone, it's really hard for buyers to get in. There's a lot of house hacking. So we're seeing parents co-sign and kids move in and live in the basement and then rent out the upper portion after, like, it just is what it is, because they need to help cover a portion or rent out rooms or things like that they've decided they're going to do. So that's interesting. But yeah, definitely wealth transfer wise, and not even necessarily from people selling, to be honest with you. Like, we're seeing parents cash in investments, give their kids money from investments. Yeah, there's a lot. And actually, it was funny. I was looking at my kind of stats, and the amount of 20% down mortgages I've done significantly outweighs high ratio, less than 20% down mortgages. So also interesting to see.
The dark side, this is the ugly underbelly of our business. It really is, because this is stuff that doesn't get talked about. Nobody sees this. You don't see this on Instagram and Facebook. You just see all these people buying houses and living in these houses. And you go, how can people afford it? The reality is they can't. They're having to get help. And in fact, I was actually talking to a kid in his mid-20s who just moved in with his girlfriend, and they bought a townhouse, and they're in BC. And he was almost embarrassed. He's like, well, I couldn't afford it. We had to borrow money from her parents. I'm like, dude, everybody is having to do that right now. Don't be embarrassed about it. It's really fascinating to me how the world looks on the surface. Social media plays such a huge role in that too. Everybody's pretty life is on the surface, but the dark side of this is generational wealth is having to help people buy homes right now. And it's scary. It's scary moving forward. It really is, because this can't keep going, because the generation that is transferring wealth right now was at a point where made a lot of money when salaries were extremely high and houses were not extremely expensive. And the world is completely flipped. Salaries have not changed that much, but houses have tripled and quadrupled in value. And so over 25 years from now, this is going to be a very different conversation.
For sure. And I don't think there's going to be the same mentality either. I do think the younger generation is very much, I don't need to pay off my house. They treat it almost like rent, where it's like, this is my asset. I'm going to own this. Who cares if I pass away and don't have equity to pass on to my kids? Whereas older generations, that was like the ingrained goal, is leave something for the next generation.
Yeah.
So I
Yeah.
think it's a different mindset. I also think it's interesting because the wealth gap is going to just keep widening, because those who have and those who own and those who were able to, build up this equity and pass it on to their kids, that is something that renters can't do. A renter
Mhm.
typically can't come up with a $200,000 down payment, whereas a homeowner who sells and downsizes might be able to pass that on to their kids. So I think you're going to start to see, and this was kind of something that came up in a conference like a while ago, is that K-shaped economy, where you're going to start to see the homeowners keep going up and the renters keep going down. And just because homeownership is so critical to wealth, on average, homeowners are 30 times wealthier than renters. So it's crazy. The stats are really eye-opening. So I do also think, a lot of our generation has no problem co-signing and no problem gifting, because we do want our kids to own a home. Whereas the next generation, a lot of them they're just okay renting. So like, it's going to be interesting to see in 10, 15, 20, 30 years. I mean, if we're around, but it'll be interesting to see. Some of us, I should say, not you youngers.
Well, and you just look at it, some of the reports that came out at the end of last year, where first-time homebuyers are out of the market until at least 2027 to see what's going on in the world. And then we look at what's going on in the city for what's being built. And it looks like this whole city is under construction, but what people don't realize is a lot of these homes are not for sale. There's a lot of purpose-built rental, a lot of the condo buildings that are being built in inner city neighborhoods, a lot of these 6 and 8 plexes, they're all rental properties, because that's what this generation wants. Like, we're training people to get into the perpetual rent cycle from an early age now, versus training them how to get into home ownership, because it has become so exclusive to own a home.
Without going down a political path too, I think that
I tried to stay away from the political side of that and play it,
there's a lot of reason for purpose-built rentals outside of just needing a place for people to live too. So it'll be interesting to see what happens.
Yeah, I think the whole blanket rezoning repeal, it's going to be a fascinating time in the city, and we're right in the middle of it. Like 5 years from now, we're going to look back at right now as a critical time in housing in this city and in this country, for sure.
Yeah. Awesome.
Danielle, that was wicked. I appreciate conversations all the time.
No,
anybody have any questions for Danielle or anything else you guys want to bring up? Trav, you got
Actually,
anything?
I have one final question. Sorry. Danielle, with the so qualifying as like the definition of a first-time home buyer, is that similar to, as with mortgages, if you've been out of the market for say 4 years, are you a blank slate new homeowner again, or do you think it's a different rule for this rebate?
Yeah, so it is, you have to be 18 years old. You have to be a Canadian citizen or permanent resident. You cannot have lived in a home that you or your spouse or common law partner have owned or co-owned as your primary place of residence at this current calendar year or in the previous 4 calendar years. So they make it really lovely. But essentially, if you're married and your spouse owns a home and you filed a tax return, you had a utility go there, you lived there, you're no longer a first-time home buyer. So it's important. We get the question a lot, and we will always revert to an accountant. So we will always tell our clients, listen, this is our interpretation, but you need to go check with your accountant, because lots of people will move in together and it's only been, call it 4 or 5 months, but they've got their tax return now going to that address or utilities to that address. Ultimately, at the end of the day, CRA is the one that's deciding whether or not you're a first-time home buyer. So when they go to do their audit and their due diligence, you better have the documents to back it up to show that you didn't occupy that property and you didn't have mail going there. And, definitively they can determine that you are in fact a first-time home buyer.
Okay.
And then spouses. Oh, sorry, Brandy.
Like for
sorry.
mortgages.
Go ahead.
For mortgages, like say if you get divorced.
Yeah.
Then can you be a first-time home buyer if you're buying on your own for the first time?
Yeah, and you can still have a cosigner. Like you could have a parent cosign for you still, and still be a first-time home buyer. So it's yeah, it again, it just depends on your, like you have to have a legal separation or divorce agreement in place. You have to obviously show that that matrimonial breakdown has occurred and happened, and it's legalized. But then yeah, they did expand a first-time home buyer to include that realm of people. So
But
which
it
is,
wouldn't work for the GST, probably. It would only work for like your mortgage.
well, this is where I'd say go to an accountant, because under the 30-year amortization, excuse me, and RSPs, it specifically says set marital breakdown. Under the GST rebate, it's not listed as a specific example, but that doesn't mean that it might not apply. Like that would be something that we would say you need to talk to an accountant about, because ultimately, again, CRA has the final say. So it was the same thing when the foreign buyer ban came out. We could interpret it the best we could and give the best advice we could, but we always sent people, go talk to a lawyer, because a lawyer is the one that's going to definitively tell you what you qualify for. So same thing with this CRA, we always say, go talk to the accountant if there's any gray area or any questions at all. Yeah.
Awesome. Cool. Danielle, wicked as always. Anybody else have anything you want to ask Danielle, or anything else you want to talk about that Danielle can just listen to?
I just listened to Jonathan Getty explain this morning. It's nice to get the full story.
Except Danielle and I talked about his, so let Danielle talk about it, how she really feels about what he said.
About getting paid?
We got about the same thing. So he had done something about taking out an RSP loan, getting the credit back from the government, taking that credit, because then you get that money back in your pocket, and putting it towards the loan and then buying your house. The only thing with that is when you're calculating your debt ratios, a loan is a loan and the payment is a payment. So unless you pay that loan off entirely to $0, that payment's still going to exist and still going to factor into your debt ratios. So what you get in rebate is not going to be the total loan that you pulled out. You pull out $20,000 for an RSP, you're not getting a $20,000 tax credit back. So you do have to take into consideration that if you take out an RSP loan, that is going to count as debt in your mortgage application. Yep.
Travis left by accident while you were explaining it.
I can talk.
We can call you.
But yeah, it is interesting. Like there's definitely hacks and ways to get money back, but you just would want to make sure that that loan, in an ideal world, you could pay the whole loan off after you get the tax credit back, so that when you're applying for mortgage, you don't have that added debt. Again, every client's going to be different. Some clients could handle that extra debt and it's no problem. So
nice.
Yeah.
Very cool. Okay.
Hey, well, thanks for having me, you guys.
Thanks for hopping on. Appreciate it very, very much. I hope that was insightful for everybody this morning.